up? Thank you so much, Cecilia. I hear what you're saying about the fact that the economic numbers are going to be kind of unpredictable right now, but what did you make of the jump in consumer prices last month, the largest hike since 2008?
Yes, I mean, that's obviously an important question, and it was interesting to me that even the Federal Reserve was a bit surprised by the jump. So we hadn't forecasted that. The forecasters hadn't expected that. But if you dig below the surface, what you see is, for example, 30% of that increase was in the used car sales market. And we know that there are supply chain issues there with the semiconductors. And if you think about getting back and healing markets, we know that rental car companies are buying, they have to replenish their stocks because they liquidated their stocks last year when people were not renting cars. We know that because of the American Rescue Plan, people were buying cars because many people were afraid of taking public transit, which is not good either. But instead of taking public transit, they wanted to buy more new cars. But with the shortage in the semiconductor supply chain, the supply just wasn't meeting demand. So that's where a big part of the jump was. Another part was in those sectors that were really hit by the virus. We saw some of them are starting to come back. The most vivid example that we found was in the airline industry, where we saw a 10% increase in their prices month to month. Well, I don't know about you guys, but I know lots of, okay, I'm working here, so I don't get time to do this, but other people I know are looking forward to taking time off this summer, and they're buying airplane tickets. So there was a 20% increase in airline tickets, but it's still a 10% increase in airline tickets, but it's still 20% below where it was before the pandemic. So those prices are increasing because we were at unusual lows because of the pandemic. They are rebounding as the economy starts to heal, but many of those sectors are actually not even back to where they were before. So we expect there's going to be a period as supply starts to equal demand and sectors are healing and recovering, that we're going to see some, there's going to be some choppiness.
But even if that's the case, at what point does concern about inflation become its own economic problem?
So, look, this is really the purview of the Federal Reserve, and we try to maintain their independence. But what economists worry about is when inflation becomes de-anchored. And so at the moment, it looks as though people fully expect this inflation to be temporary, where temporary is when the economy more fully recovers. But that we understand that they're not sort of structural factors that should lead to an inflation that the Federal Reserve cannot control.
I was wondering if I could follow on that a little bit. There seems to be this assumption that we've heard from people within the administration that this inflation is temporary, that we'll get through the choppiness by the end of the year. And I'm wondering what you're seeing in the data that suggests that's true. Is it just sort of hopeful guesses based on coming out of the pandemic, or are you actually seeing something that doesn't lead to that worst case scenario?
So as I just gave an example, much of the increase last month was in airline prices. So airline prices ticked up because they had completely cratered last year this time. So there's been a robust increase month to month, but they are still not even close to where they were this time last year. So clearly the airline industry is recovering. I do not expect those prices to continue past where they were last year. Because at some point people will stop, I don't think people take multiple vacations, but I think many people have been cooped up in their houses and they would like to travel. And so we're seeing, increased demand in the airline industry. So, let's take the auto sector, which accounted for a third of that increase. Again, I expect that to be one time. So there's going to be this kind of misalignment, and that's what happens in economics. Prices are signals, right? They signal when something is in short supply, when something's in oversupply, and I fully expect that will work itself out in the coming months.
Right. Michigan's consumer sentiment survey came out today. It was much lower than expected, which indicates that people might be fearful that this is a trend beyond just, okay, yeah, we're all buying plane tickets for the first time, or there's one sector of the economy. So I guess I'm curious, are you really just chalking it up to these initial stumbles, or do you believe that there's this problem?
So this was an unprecedented economic downturn. I don't know about your lifetimes. I think I may be older than most of you. We have not had, first of all, the pandemic, so where we completely powered down the economy. And therefore, we've never had a recession that was not tied to a problem in the economy, but that was tied to a health problem. And so there's even uncertainty about the recovery because our recovery is hitched to the virus. We are making fabulous progress in this country in terms of controlling the virus. But I'd like to remind you that only 58% of adults have had one shot, at least one shot. But if we actually drill down, if we're going to take the example of the labor market, only a quarter of those who are aged 18 to 29 are fully vaccinated, and only a third of those aged 30 to 39 are fully vaccinated. We are just not to the other side of this yet. So, obviously, we sincerely don't want to see our economy end up in a hyperinflation of some kind, but it is just too early to be drawing that conclusion when we consider the depth and the nature of this economic recession. We are still 8 million jobs down from where we were this time last year. We have a long way to go.